Amit Dixit, analyst at ICICI Securities, joins us on the show. Hi Amit, good morning and thanks so much for joining in. Amit, were you factoring in a cut for the month of March or were you factoring in a rollover?
Hi, good morning, Nigel. So we were factoring a rollover because our channel checks indicated that imports as such have now abated. So when the imports have abated, we are now seeing that the domestic producers will be able to get their rightful market share, I would say. And this abatement of imports also comes at a time when actually exports have picked up. So India turned into a net exporter in January and February also, mostly. I think they would remain that way. So clearly, I was factoring in that the prices would be rolled over, and that is what has happened.
Got it, Amit. Okay, so that you've cleared the air on that. You know, we had a note coming from CLSA earlier this week, and they said that on ferrous, a little bit cautious, though they prefer the miners. And I'm looking at a couple of notes that I've got from your, that you have written. You're positive on NMDC as well as Coal India. So in your pecking order as well, would it be the miners first and then the ferrous companies?
So in overall scheme of things, you can't, run with the hares and hunt with the hounds. That is what I would put it. So if you are positive on NMDC, there is no doubt that you have to be positive on steel guys also, some of them particularly who are integrated. So while we are positive on NMDC, we are also positive on steel. But if you take my overall pick still would be JSPL. I would be, I would recommend it as a single stock if I am asked to recommend in the steel space at the moment.
Okay, so JSPL is your top pick. Got that. What do you make of the non-ferrous space? Vedanta suddenly is perking up. Yesterday, towards the end of trade, I don't know what was the news flow, but the stock ended higher. Hindalco is having its share of problems, because of that incremental capex, though they're talking about listing Novelis. And Nalco, valuation-wise, has gone out of whack. So from non-ferrous, what is your preference?
No, so I would be a little bit discerning over here. Some of the PSUs, particularly whether in steel space or non-ferrous space, likes of SAIL, if you talk about Hindustan Copper, if you talk about Nalco, they on valuation front, they seem to be a little bit out of the range. However, our preference goes with the companies that are able to show volume growth. And in that way, if you look at JSW Steel, it is there is going to be 6.5 million tons of capacity coming on board by beginning of April. So clearly, you have a company that is ready to capitalize on the growth prospects. In case of SAIL and Nalco, though, there is no growth in the near term, and that's why we are cautious on these two names. In JSPL, we are positive because of the cost efficiencies, and that actually mitigates some of the impact that you will see from erosion in spreads. And don't forget that JSPL is also exposed to thermal coal, which is falling in the country. So therefore, their spreads compression or the impact on spread, I think, would be the lowest among the peers.
Okay, all right. Well, thanks a lot for giving us your quick take. Let's